Mavericks. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, as usual, and we're in the middle of April here. So third week in April, let's see what happened last week. We said that last week was going to be a decent trading week. Not a great trading week, but a decent trading week. And we went into the week saying, look, the best trade out there right now is cryptos. And we looked at all the Forex crosses and we said, look, I think the best trade out there is Ethereum. And you can see here, the cryptos stayed strong all week long. And we take a look at what the equities did. The equities actually crept up, but it was a choppy move. But we actually were bullish in equities. And we saw the dollar weaken for most of the week, and then we pop back up on Friday to where we're basically fairly flat. We're going to talk about the dollar here. It is like it's range bound, but it's weakening slightly. It's just in this very, very slow moving down move. And we think there's only really good opportunities when you get a spike in dollar to actually go short. Let's take a look at what happened on the calendar. We did have the Easter holiday, so it was a quiet Monday and Tuesday as we expected. US CPI comes in a little bit weaker than expected, which the market did like. So they're looking for 5.1 over the year over year is 5.0, looking for 0.2 on the month over month, it was 0.1. This is moving in the right direction. That being said, 5% year over year is still very far above the Fed's target of 2 to 3% a year. So there's still more to do, but this number is coming down. We then heard from the Bank of Canada, and as expected, they held rates steady, and they told us a week or two ago that they were going to hold rates steady. No surprises there whatsoever from Bank of Canada. Then on Wednesday night, we got better than expected employment out of Australia. The Aussie got a little bump, but nothing all that substantial. The Aussie and the Kiwi are still in some pretty sustained downtrends, and they have definitely not broken out of them. We then got the US PPI, and this was the one that I was very surprised at. Look at that month over month, down 0.5%. Expectations were for 0. Core was supposed to be up 0.2, down 0.1. This is a huge, huge miss as far as inflation goes. And this is telling us inflation is starting to come down. Now remember, the PPI is producer prices. This is what manufacturers are paying for things like steel, aluminum, plastic, cardboard boxes, all those things. That's what they're paying for. When their costs go down, then they can actually lower costs to the consumer. It is a little bit more leading than the CPI. And then last on Friday, we got retail sales out of the US, and it was ugly. It was an ugly report, and the market actually did sell off a little bit on that report. So I think here we are. There is a balance of the market wants inflation to come down. But remember, inflation was high because we had such a strong economy from all the stimulus after COVID. Inflation coming down only comes down when people aren't buying as much. So there's this thing called the soft landing that the Fed is always trying to get to. And that has been very elusive for most of the central banks out there. Can you slow down the economy enough to bring inflation down and yet not go into a deep recession? That's where we are right now. The inflation is coming down, but the economic numbers are coming down too. The question is, can we get to the point where the economy doesn't fall apart and we get huge job losses and then we really go into a deep recession? That is the question, and that is, again, the soft landing that the Fed and all central banks are trying to accomplish. Let's just take the core raw numbers last week. We can see the SPX, S&P was up slightly. The world markets did much better. Look at that move in crypto. We liked crypto last week. We like cryptos again this week, up a nice 7% on the week as a crypto basket. Gold that has been really hot lately, it backed off. Now look, down 0.25%. It was down about 2% on Friday, which means Sunday through Thursday, it was actually up about 2%. And so gold remained strong, but we did get that pullback. Oil had a very strong week as well. If we take a look at equities, I really want to focus here on the overall move. We said, look, we think this market is going to creep higher and make it all the way up to that 4170, 4180 on the SPX. Okay, we got up there on Friday morning, we backed off, and this candle here is coming off of some resistance. this was a choppy move. So when you just take a look at the channel here, you say, oh, that was an up week. Look how choppy it was. 2 days down, 1 day sideways, 1 day down, one big up day, one down day. This is a very choppy equity markets. This means that anything that is highly correlated to equities, like the yen, is likely to be choppy as well. So we think anything that's very highly correlated to equities, we think you want to kind of avoid those right now because the equity market is so choppy. Ultimately, this is an uptrend. We have some resistance at 41.70. We could back all the way back down to 41.80 and be just fine. My personal call is that we move more sideways than up from here. We have come a long way off the bottom. And I think at this point, we are likely to consolidate some gains before we do anything past this. Anka, what's your call on equities here?
I think I'm in the same boat as you. I think where we are in the markets, there's a lot of different moving parts here. But overall, the direction has been higher. So I think as we take a look at the direction, I think we are seeing buying on the dips. So as long as we see the buying coming in on dips, the market movement is limited to the downside. And I think that's the trade that we are seeing here. We are not seeing a lot of aggressive buying coming in on those big candlesticks, but we are definitely seeing buying coming in on dips, which means that there's a lot of money sitting on the sideline that coming in to work as the market did pull back. So this is, again, a good sign for sort of a breakout happening. But again, timing for that, we might consolidate for a week or two. But that's a theme that we are seeing here. So I think those bearish days are likely to be recovered very quickly. So that's the theme for next week.
Let's take a look at the currency market. Now, as I said earlier, this was a good week. Now, let me break down what I consider a good week. A good week is that things moved large enough for there to be a decent chance of making good profits. A good week is where a couple currencies actually went up or down more than 1% for the week. As you can see here, we've got 4 currencies, yen, Swiss franc, euro, CAD, and Kiwi, all moved around 1% or more than 1%. A great week is when they move 2 to 3%. We only probably get about 5 or 6 of those weeks every year. The bad weeks is when you see things move, where there's really no currencies that move more than 1% and everything's moving about 0.5%. Those to me are low volatility weeks. So as you can see, this was a decent week. We liked the yen and the Kiwi as shorts, and we called that nicely. And we liked all of the European currencies. We liked Swiss franc, the euro, which worked great, and we also liked the pound, which did not work this week. We are still liking those currencies in the Forex market. But that being said, the real stars were the cryptos last week. So I've been focusing more on cryptos because this is where the action is. This is where the movements are happening. And we've liked Ethereum the best of all. And you can see, boom, up 11.44%. Bitcoin up 6.6%. They're really moving here right now. Now, we will take a look at cryptos. They've had substantial runs. We don't buy things after substantial runs, but we buy them off of pullbacks and bases. We'll take a look at those here in just a second. So let's kind of boil all the analysis down here. We've got equities. We are at a +2 on equities. This is a moderately bullish market. So you want to be in risk-on trades. This here is the VT. This is the World Total Market Index. You can see it's doing the exact same thing as the S&P. It had a choppy week, and it came all the way up to resistance and kind of hit its head on it. I think we see sideways again on this market here until we eventually do break higher. Moving on to the cryptos, we already did the chopping, and now we are breaking higher. Okay, this is very bullish. Look at all of this resistance we have cleared out of. This has been a brick wall for a long time. We cleared out of this. So you get this euphoric run, you get this run higher, and then you usually get some exhaustion. And boy, we saw that exhaustion on Friday. That exhaustion, look at that upper candle here. We gave it all up. We just lost the exhaustion. At this point, this run is over. We need to let this thing cool down, cool off, consolidate, get ready for its next run. So we like cryptos, but not right here, right now. The time for cryptos was this week, and we hit it perfectly. We just need to let these cool down just a bit. Next week on the calendar, we've got some good news coming out here. Let's take a look at Canadian CPI. I think that's going to be one that's sort of important. And I think you might as well keep your eye on the CPI out of the UK and New Zealand. All the central banks have been very clear they're slowing down their rate hikes. And they're slowing down and becoming more neutral. We need to watch these CPI reports because, again, the market may need to reprice what the central banks are doing. And then after that, we've got manufacturing in Europe on Friday, and that is about it. I don't love any news trades here this week. I don't think any of these trades are going to be great as far as news, so I think you just want to do regular trading. So this week's outlook, we are still mildly bullish in equities. We're now a little bit more sideways here as it consolidates. We're not really going to get anything for central banks. And then we already went over those CPI reports out of Canada, New Zealand, and the UK. Those are going to be the biggest ones for next week. Let's take a look at these currencies and let's all rank them and see where our focus is going to be this week. Let's start with the cryptos. The cryptos have been fantastic. And once we had some breakouts, we really liked cryptos. We got bullish here on Bitcoin when it broke out of 24,000. It ran up, gave us a really long high base. And we said, look, you're hunting for breakouts. You're hunting for the breakouts. Boom. It happened here. Very nice breakout here, about 8% higher on Bitcoin. At this point, look what we've done. This is what Bitcoin does. It runs and it cools off. We are definitely getting cooling off action here. We're definitely getting basing action. I think you can still buy high base breakouts on shorter time frames, but understand that we've probably already had the big move. If you're looking for, Bitcoin to make another $3,000 run, it's probably not going to happen. You're probably looking for more for $500 runs at this point. But we still like it. Any pullbacks or high bases should be bought on cryptos here. Well, not all cryptos. Here's Bitcoin Cash. It missed the invitation to the party. You can see here, we did not clear out of any resistance. And frankly, we're not even close of clearing out of resistance. So no reason at all to look here because there's better stuff out there. We became bullish on Ethereum once it broke out of this resistance level 1700. It broke out, it based. This little breakout here didn't really have the energy behind it, but this pullback, boom, we broke out here. And at this point, you're just buying pullbacks and high bases. Right here, right now, we have a long run here. We just had a 12% move in the last 2 days. It needs to cool off. Maybe it backs all the way down to maybe like 1950 or 2000. We'll see. You just can't go chasing it here. It spent all of its energy. We need to let it cool off. So this week, I think you don't really want to be dabbling in the cryptos too much unless we get like a good pullback early in the week. Then I think they look like fantastic trades for the week. Here is Litecoin. Litecoin, like Bitcoin Cash, it hasn't broken out yet. We really couldn't even break out of this high base here. You could see we broke out and we couldn't hold it. Major resistance up here. I think you look at Bitcoin and Ethereum only. Last week we said we liked the crypto market better than Forex, and this week I think it's going to be the opposite. I think crypto is going to take a little breather, and I think Forex is going to be good. So let's see where we're going to focus on. Now this is the dollar chart I was talking about. So we peaked out. Remember, we peaked out all the way last year, and we had a big fall in dollar. And then in the first quarter of the year, we had a big rally in dollar. And you can see the trend is now clearly down. But look at this trend. It's not like a huge downtrend. It is just sliding down. We broke down. We rallied. So look, you want to be a seller on rallies. This last candle we got is a nice little rally. We don't know if this rally is done, but I think you short this dollar rally. What do you think, Ankit?
I agree. For the most part, if we take a look at since we kind of peaked in early March, that is a trend. And unless the trend starts to do the opposite, I think that's still the right trade. Every little rally is being sold off. So I know today's candlestick is a very strong reversal candle. But while we have so much overhead resistance here, I think the easier trade is still to the downside versus the upside, guaranteed. Like if we break above and start to make a higher high and a higher low, that is the bullish case scenario, but that is not the case right now. So as long as we have this lower high and lower low, I think the direction is still to the downside. So I agree with that. So let's take a look at Japanese yen. Overall, I mean, Japanese yen has been trading in this wide range, and we talked about how this thing has been mostly running on volatility. And I still think that is the case. The trend score is not a -2 or a 3. I think it's still in a -1 here. But as long as we still hold that March support, I would not be, turning as aggressive. But if we break below that support, I think that would be the time to kind of kick it up a notch here and go with the -2. So we are very close to the support level here. So I personally will be looking elsewhere. I think this trade is still a two-way trade, meaning that if there's a good move in the markets on downside, I think the yen kind of kicks up and vice versa. So this is, again, a tough trade, as I call it, because we get aggressive moves both ways. So looking into next week, nothing has changed. My idea is still trading the same way. But for now, I think it's more to the downside than it is to the upside. So shorting the yen on the pop is also a good trade, similar to what we looked into the dollar. Now, if we take a look at other currencies, I mean, this is where it is very clear where relative strength of weakness is. Now, euro, Swiss franc, I mean, these two currencies have been running very nicely. And again, we can find, 10 reasons why they shouldn't be the strongest. But again, that's not the point. The point is, this is where the money is flowing and the trend score is higher there. I mean, take a look at velocity score. Even though when we slow down, we just pull back very slightly. So this is, again, a very bullish sign. We are not really giving up those gains. We're just consolidating. So whenever you get this kind of price action, the continuation is much more likely for this. So right now, there's no topping signs whatsoever. It does look extended, but I think has a little bit more room for this to run before it does turn around. But for now, that is where the place to be. Now, a very similar situation with the euro as well. And again, I think the Swiss franc actually done better compared to the euro. And so far, you can see they're following the same pattern. Euro is slightly weaker compared to Swiss franc, but a very similar pattern. So, I think between the euro and the Swiss franc, we need to pay attention to the euro Swiss franc currency cross. If that currency cross is diverging, then we know we need to pick one or the other. But like a day like today where euro Swiss franc is pretty much the same. So this is where it makes it easier call to follow either Swiss franc or the euro. But again, they're kind of following the same footsteps. And lastly, the British pound. And this is another currency that, again, is trending nicely, but this week was just a pullback week. But I actually do like this pullbacks because this gives us an opportunity to kind of go long into. And right now, as you can see that we actually found some support at a 20-day moving average. So as long as we hold this support, I think we can easily rally back up next week. So this will, again, goes on the top of my list on looking for a long if there is sort of a recovery in this pair. So overall, nothing really has changed as far as the trend goes. Now, talking about change, I think, and Rob, you can kind of chime in here for this. The Canadian dollar has been, in this sideways trade. I mean, we talked about how it's been really tagging along the U.S. dollar, but I must say that I'm noticing a difference here. I'm noticing a difference where, the dollar is in a downtrend, but the Canadian dollar is actually trying to rise higher. So we are seeing that divergence start to come in play, which again falls in line with seasonality patterns. Canadian dollar usually do well in the second quarter, exactly what we're seeing here. And I think I do like the CAD long here on a further breakout. But remember, this breakout has been in place for like the last 6 months. So we need a confirmation. We got right up to that resistance, but I mean, look at the velocity. We haven't really turned around yet. So this is, again, a great currency to take a look at into next week for a potential breakout. But remember, we need a confirmation candle that gets us out of this little sideways range that we've been stuck in. And I think after that, we'll have a much clearer signal on its direction here. Again, this is one of the currency that we really haven't traded or paid attention to as much. But this is something that we're looking for, that rotation. And I think this is a currency that we could potentially see a rotation in. So this goes on the top of my list going into next week. And talking about relative weakness, Aussie. I mean, take a look at Aussie and Kiwi. Both are performing very poorly here. And this is, again, all the rallies are being sold. And that is the right call on this in this trade, is that just to sell these rallies. So overall, we are seeing a little positive velocity, velocity it's a -1 right now, but I think direction overall is still on to the downtrend here. So it's very clear where the uptrend is and where the downtrend is. We're seeing uptrend in European currencies, and we're seeing downtrend in growth currencies like the Aussie and even the Kiwi. And I want to highlight that on the Kiwi side, Kiwi was one of the best currency in the last quarter of last year. We had a massive rally. This is slowly unwinding here. So comparing Aussie to the Kiwi, Kiwi is the clear loser here. And I think I still like it further to the downside. Again, yesterday's price action was pretty strong, and I thought like this could be a fake breakout to the downside, and we're recovering right back up. And here we are back at the lows again. So again, this is where the rallies are being sold, and that's a clear signal that this is the right place to be on the short side. So I'm looking for a short of these rallies on the Kiwi as well. So it's pretty clear. I think CAD is the kind of in the middle here, but I think CAD can easily move to the right side, where on an average, where we're seeing money going to the Aussie and Kiwi, that is not the case. Outside of that, we still want to be long the European currencies. Remember, there's no reversal signs yet, so it doesn't matter if you agree or you think it's extended. Until you see a sign, it's better to be on the right side of these markets here. We have the dollar that's still in the middle here, and I just want to kind of reiterate that the dollar, I still am into the middle here. I think the dollar is not as aggressive short, and it's not an aggressive buy. So I think the growth currencies versus European currencies is a clear long and short. Now, when it comes to velocity, we can see that the dollar is really doing well today, along with the CAD. And if the CAD can hold on to this velocity, I think is really setting up for a nice breakout next week. So that's the one thing to pay attention to. If you're looking at dollar and the CAD, if the dollar weakens and CAD holds, now that is a positive sign. This is exactly what we want to see in the price action, because in the last few months, when the dollar goes down, CAD kind of follows. So we need to see the CAD kind of deviate from that behavior, and then CAD start to trade on its own, and that is where CAD will become a good currency to pair with other currencies with. So right now, velocity is to the downside, Aussie and Kiwi. I think the way we are closing out this week, we could probably see further continuation of what we are seeing so far today. So that's really where we are. And next week, again, we'll be looking to be more active, especially around those CPI numbers, because I think that could really provide some more movements into that direction.
And Ankan, I'm glad you pointed out the CAD, because it has been dead for a long time. And when you start to get these currencies that have really been forgotten for so long, they've built up all this energy. So when you do get the change, it can be really explosive. And I'm with you 100%. If that CAD can deviate from the dollar and break out of its range, I think it is the best trade on the week. Other than that, I like the pound this week as the best trade of the week, because I love that pullback that we got at the very end of the week. I think it's setting up nicely with the most amount of energy. Let's take a look at a couple potential trades. On my list, I've got pound as my favorite, and I've got Kiwi as my least favorite. That was the trade I had last week as well, and it really worked nicely in the first part of the week. So here's the daily chart. We had a high base here for about 10 days. We broke out of it, had a nice run from 198 all the way up to 201. That's a 300 pip move. We returned back, lost about 2/3 of it, and here we are right at the breakout point. So on a daily chart, there's a lot to like about this, and you can see that we're having a nice green candle here on Friday, telling us that it's already found a little bit of buyers at that pullback point. Looking at a 4-hour chart, okay, we just had this big candle here. I actually really want to buy any little pullback I get off of this. Again, this is a 4-hour chart, so we probably need about 2 or 3 more candles at the beginning of next week. But I'm ready to go long here. If we do break out above the top of this last candle, which is right there at 202.0020, I think that's a buy. If we can clear out above this candle, again, we had a huge explosion of energy. It ran out of gas. People had to pause. If people decide that they want to buy it past this point, that to me is a buy. Short-term target has got to be here at 201.15. Okay, that's a nice 100 pip gain. I think it's definitely worth taking there, but I think you want to wait till we clear out of this range. This is my favorite trade at the start of the week. If cryptos have a good pullback next week, I will absolutely look to those at the end of the week, but until they get some consolidation or pullback, I'm just not interested. Okay, what currency crosses do you want to take a look at?
Hey Rob, like my main currency crosses are going to be around those Canadian pairs. So let's take a look at GBPUSD. This is again one of the pairs that I've had it on my radar for the longest time, and I must say that it took that stubbornly 6 to 7 months to really unwind this. But I mean, take a look at how like in this range that we've been in. So I want to highlight, Rob, if you want to pull back a little bit out, the rally that we saw like last year. I mean, that was a 12% rally from the bottom. And I think that was like one of the best run that we saw last year. So talking about this, I mean, we have unwounded from this 87 down to 84. I mean, that's really where the support was. But the question is that if we continue to break below this, and let's say if the CAD really takes off, I think this pair is setting up very nicely to sort of return to the mean here. Because for the most part, this pair hasn't really gone anywhere in the last 5 years, but it is right now at the upper end of the range, which is where I like it further to the downside, especially on further weakness in this Kiwi currency cross. So this is the one that really, jumps out of the top of my list here. I mean, I think we can do the same thing with the Aussie CAD as well. We're seeing a very similar pattern, and I just want to show that for a lot of these CAD crosses, that we are at these breakout points. And for further extension of this, we'll confirm that it wants to go lower. And Rob, if you want to pull up dollar CAD, that's another one to pay attention to, because we have been above, above this range. I mean, we don't have a moving average on this, but we are above. We broke below that 200 moving average on this pair. So if we continue to break below that 132 support, I think we can aim towards that 130 and below 130 range. So this is the one that jumps out the most. And lastly, CAD yen. Rob, if you want to pull up any yen crosses that's ready for a breakout, I think this is the one that has tested that level for the longest time. If we can push above that 101, there has a lot of room for this to kind of catch up to the upside. But overall, as you can see, that this thing has been trading between the 100 and 95 range. That's a 500 pip range. So a breakout above this can easily get us towards that 104 range, which is a good risk to reward ratio. So remember, we're trying to figure out the timing on this. And as long as the CAD remains strong, I think a lot of these CAD currency pairs are looking to go for a run. And it doesn't matter if it's a CAD yen, dollar CAD, Kiwi CAD. I mean, all of these pairs are looking great. It's a matter of being in the right place at the right time. But I think based on risk to reward ratio, I do like a lot of these pairs. Back to you.
All those CAD crosses look great on a daily chart. So in conclusion, we like the market, but we think the market has probably stalled out a little bit, the equities. We do have first quarter earnings are starting, so that always brings more volatility. So we could see some changes in equities just based off of earnings reports, but we'll adjust to that. That's no big deal. It's very clear what's moving here. European currencies higher, Aussie, Kiwi lower. I think that's where you want to focus. And then later we can jump back into the cryptos once they've cooled off a bit. That is the Currency Room. Thanks for joining us. Everyone have a great weekend and take care. Goodbye, everyone.